little bit, really. And we're running at, dare I say, ahead of time. After all that focus on being timely, we're on time, which is good. Look, the final thing I said this morning was the simplification and the alignment of incentives. And what you see on this one chart is how we were in fiscal 26, both at the leadership and the broader team level from an annual and a long-term perspective, and what it is we're moving to in terms of 27. Now, from a REM policy point of view, Susan is out consulting at the minute. Our new strategy for Nick and I will be voted on in November. But notwithstanding whatever might happen in that space, this is what we're doing for the teams inside Diageo. So at the leadership level, I've already told you NSV, operating profit, and those individual objectives. And if you're a business group president, your first individual objective is the delivery of your region as part of that total. Longer term incentives, cumulative cash flow, EPS, and return on invested capital. That's it. Importantly, elsewhere in our business, we're putting the accountability and the alignment where the activity is. So if you're sitting in our go-to-market organization, you will get your bonus based on how you delivered your part of the organization and not be linked to what's going on somewhere else in the business that you can have no impact on whatsoever. Look, I think at the leadership level, you'll see the massive simplification that the board are trying to drive for the long-term key performance indicators. We haven't really changed our REM policy for, I think it's 12 years. So there's quite a simplification involved in the long-term incentive. But hopefully you see on the right-hand side a simplification and alignment to what it is we've talked about as the investment thesis for Diageo. Okay. Now, in the old model, when you were taught communications, you had that thing which is, at the start, you tell them what you're going to tell them. Then you tell them. And then you come back and you tell them what you told them. Anybody else had that training? Cool. So, just to recap, what did we say at the start? And I hope you... two strategic battlegrounds. Spirits, including RTD, and Guinness. We see growth in both, and we see an ability to win share in both. A number of you have said to me before, do you think you can win in RTDs? Hopefully you now realize that we're number 2, we're growing strong double digits, and there's actually, we're in the fastest growing part of the market, and we're committed to do it. We've got to do more, but you understand why we see RTDs very much part of the spirit occasion, and that's a big change for us. Reassurance for you that premiumization is still very much part of it. You will see some more when you go down to the Innovation Centre, but we are going to think about how we activate a broader portfolio. We have a unique portfolio as Diageo, and we want to use it much more proactively than perhaps we have done in the past. And the way that we do that is we bring those category strategies, that category lens on top of those brilliant brands in order to manage the portfolio much more proactively. John was very open with you. We wanted to be I said at the start, we're going to be very transparent. We have some challenges in North America. Some of them are long-standing, some of them are more recent. We know what we want to do. It's going to take some time. We've got a very committed team there. We've made some very big interventions. North America is a big market. Making changes takes some time, but we're not shy about recognizing where we start from. And as we lean in and do that, and support John in the turnaround, we continue to accelerate growth in the rest of the world. Nick said it again, we're not looking for a profit reset as we walk through that turnaround, right? Given what we've done across the business, both this year but going forward, we're going to invest 1.2 billion, as you've heard, in that restructuring program. The details you've seen and Nick has just talked about, but that saves us 1 billion. And that 1 billion allows us to invest in the innovation, some of which you've seen, some of which you'll see downstairs, but also to invest in competitiveness. And again, that's not about price. There's some tweaking of prices of that category strategy, but really in the scheme of things, compared to what some people wrote, we're talking about tiny things. But the investment in competitiveness is small packs, better packaging on Smirnoff, addressing some of the issues that John talked about. That's investing in the competitiveness of the mix. On Crown Royal, putting the quality back into the packaging is investing in competitiveness. So when I say that, I'm not talking just about price, okay? So please understand that. But it also allows us, let's be clear, to protect the underlying profitability. Cash generation, leverage, Nick has been super clear on. We'll invest 1.25 billion of capex over those periods, and you've now seen the breakdown of where we're going to spend it. Big expansion on Guinness. All right. If you looked at it historically, you see what's going to happen over the next wee while. We really are going to open the supply chain on Guinness. Capital allocation, unchanged. As Nick says, we hope to give our board a problem going forward of how best to think about returning funds to shareholders, but we've got to deliver it first. The focus is on organic, right? We don't want to be part of the speculation that's out there. This turnaround is based on us rolling our sleeves up and doing the best job we can possibly do with the business and the assets that we've got. And we've simplified the incentive schemes, as I've told you, and it aligns completely to what drives value in the business case. Okay? Lot to do. We've done a lot already, I think. There's a lot to do. If you haven't tested it out already, do so in the breakouts as a team. We're confident we have a plan that we can deliver. We're confident that that delivers value for our shareholders, and it puts Diageo back in the place we all want it to be a long-term compounder of value for our shareholders. But we've got some work to do. But that's okay. All right. That's it. Right? We're now to the Q&A part of the session.